Hey all, my name is Paul Borosky and I am the owner of Quality Business Consultant. And in this video, what I'd like to cover is current ratio, what it is, and then I'll take a look at Apple's current ratio for the last 5 years. And then as a bonus, what we'll do is we'll take a look at what ChatGPT has to say about Apple's trend for their current ratio. So what the video is going to play out is first and foremost going to go ahead and give you all a little bit of background about me, who I am, what I do, and why I do it. And then after that, we'll take a look at the current ratio and then how it applies to Apple. All right, let's get this started. As promised, a little bit about me. Again, Paul Borosky, doctoral candidate, also MBA. I have been publishing company financial reports since about 2018. Typically on an annual basis, I'll do between 20 to 30 beginner's guides as well as company reports on various companies, public companies, anywhere between from Ford to Tesla to CVS and other large corporations. If you are interested in purchasing one of my financial reports or beginner's guides, just go to this link right here. I am also an author. I've published Beginner's Guide to Understanding Financial Statements and Financial Ratios. You can find that on Amazon, and the link is right here. And then finally, I am an adjunct professor and subject matter expert in finance. I've been teaching at the college level for about 10 plus years now. So if you are interested in some finance tutoring, you're struggling with your finance class, need a little bit of assistance, I do offer finance tutoring. My space is limited though. If you are interested in some finance tutoring, then just contact me at this email right here. All right, with that said, let's go ahead and finish going through this report. So what is a current ratio? In simplest terms, a current ratio just measures the amount of cash coming into a company in the last 12 months and it compares it to the money that it's paid out. And to do this, what we're going to do is we use a formula of current assets divided by current liabilities. So once we perform this calculation, there are some analysis steps to keep in mind. First rule is that you want your current ratio to be as close to 1.0 as possible. This shows that the organization has just enough current assets to cover the current liabilities, and all the other funds are going to be used to grow the company or to pay out dividends or all that other good stuff. But you do want the current ratio to be as close to 1.0 as possible. And that just means that you want your current assets to be close to your current liabilities. All right, let's go ahead and move on. All right, so now that we've got a foundational understanding of what a current ratio is, let's go ahead and apply the current ratio concept and analysis to Apple for the last 5 years from 2019 to 2023. And just keep in mind when we're analyzing the current ratio, we want to compare the current ratio to the threshold or the gold standard, which is 1.0. So anything below 1.0 is not too good for the company, and the further below 1.0 the current ratio is, the worse it is. In contrast, above 1.0 and above, then it's good for the company, but the further away it goes from 1.0, then the company has too many current assets or too much current assets as compared to current liabilities, and those funds could probably be better used elsewhere in the organization. So it's almost a waste of having the current assets too far above the current liabilities. All right, so let's go ahead and take a look at Apple. So in 2019, the current ratio for Apple was 1.54. So that means that the company had way more assets than they had current liabilities, and that's not so good. However, the next couple years, the organization would better utilize their current assets as compared to current liabilities, with 2021 ending a current ratio of 1.07. So this right here, the company is really hitting it good for the current ratio. However, in 2022, the current ratio dips well below the 1.0 threshold, but all the way down to 0.88, which is not so good for the organization. However, fortunately in 2023, it does rebound to almost 1.0. So in my most humble of opinion, in the last 5 years, the company did best in 2023 with their current ratio, with just having just not enough current assets to cover the current liabilities. But for the organization, especially for Apple, that's a good trend. So right now in 2023, the company's doing well, but they have fluctuated over the last 5 years. All right, so I just gave you my thoughts and ideas about the trend for Apple for their current ratio for the last 5 years. Now let's hear what ChatGPT has to say, our artificial intelligence guru, and let's see what their thoughts and ideas, or its thoughts and ideas of Apple's trend for the current ratio. So it starts out with the Apple's current ratio trend over the last 5 years fluctuates. So I would agree with that. It starts at 1.54, it dips all the way down to 0.88, and then it bounces back to 20 and 2023 to 0.99. So I'll agree with that. So the MBA and the ChatGPT were in line with that. In 2019, the company exhibited a strong liquidity position with a current ratio of 1.54. I would say it's not a strong position. I would say the company is probably not utilizing their current assets as well as they could. So I would say this is actually detrimental to the organization. Excuse me, but ChatGPT thinks it's a pretty good deal. In 2022, it dipped to 0.88, a tighter liquidity position. I think ChatGPT and I are right in line that 2022 was definitely not a good position for the organization. Oh, excuse me. In 2023, there was a slight improvement to 0.99, still below the 1.0 threshold, and reflects a cautious approach to managing its short-term obligations. I would say this is probably an optimal position, not a conservative or a tight position, but an optimal position. So I think, in my most humble opinion, 2023 is the best position, and ChatGPT thinks this is a cautious approach. The pattern, and so just to sum it up, what ChatGPT does is the pattern demonstrates Apple's shifting financial management strategies in response to operational needs. Yeah, so I would agree with that, that the organization is shifting their strategies, or the organization is responding to their previous years. For example, for in 2019, they had a 1.54 current ratio, which is way out of line. They're underutilizing their current assets, and so they've taken steps to better utilize their assets, and we can see that through the decline in the next 3 years. However, in 2022, they over adjusted, and now what they're doing in 2023 is they're readjusting to an optimal state. So yeah, they're definitely responding, but I think it's more of a reactionary activity as compared to a pro action, or a foresight for the current ratio. All right, so hopefully this information was helpful. So let's go ahead and wrap it up and sum it up. In summary, if you are interested in purchasing my beginner's guide or financial report, all you have to do is go to this link right here. And then if you do buy my beginner's guide or financial report, in the purchase, it does include a PDF file. And also, just keep in mind, though, it does not include the Excel financial model. That is proprietary. I do include the calculations in the financial reports, but the actual Excel financial model is not included. And then finally, if you are interested in finance tutoring, I may have space available. It is limited. You can find out if I am available and other information by sending me an email, and my email link is right here. All right, so hopefully this video was helpful. As always, go out and have a fantastic day. Thank you.